knowing that his father, the person in the world to whom he owes more than anyone else, is disappointed. Warren Buffett is inconsolable. On a trip to New York with his father, Warren Buffett is introduced to Sidney Weinberg, the senior partner of Goldman Sachs, and makes a promise to himself to never let his father down again. The encounter had a profound impact on young Warren Buffett. He looked to Weinberg as the archetype he wished to embody. The young man wants to become wealthy, and he plans to achieve so by opening his own companies. He delivered newspapers for a living and also owned a pinball machine, which he persuaded the neighborhood barbershop to install. Buffett is a master at working out the odds. He understands that he can make use of the expertise by engaging in horse betting. By the time Buffett graduates from high school, he will have made $5,000 from all of his business endeavors. You have the equivalent of $50,000 in today's money. Buffett had intended to forego attending college, but his father persuades him to do so because he placed first in his class. For the Wharton School of Business, Buffett has been admitted. Warren Buffett only attends Wharton because he wants to improve as an investor, unlike the majority of students who attend in order to become future executives for firms like GE. He is overjoyed to discover that Teaching Award is a co-author of his favorite book. The title of the book is Security Analysis, and David Dodd is the author. As the year progressed, my college grades improved significantly. Even if my grades in school increased with time, I didn't feel like I was running as much. But when David introduces Buffett to his co-author, a man who would profoundly alter Buffett's life, his attitude shifts. Benjamin Graham is a professor at Columbia who invented the investment strategy known as value investing after seeing the devastation brought on by rational speculation in the Roaring '20s. Graham re-evaluated his approach to investing in order to develop a plan that would produce gains with minimal risk. Wall Street employees are all so intelligent that their brilliance cancels one another out. As a result, what they know is mostly reflected in the level of stock prices, and what happens in the future symbolizes what they don't know. Graham has known Buffett for a very long time prior to their meeting, and he immediately recognizes Warren Buffett's potential. There are 6 people that had a significant impact, but Ben Graham, had the biggest impact on me in terms of providing me with the investment framework I needed to move forward. Without Ben Graham, I could not possibly be where I am. After completing his undergraduate studies, Buffett joins the MBA program at Columbia University and starts working for Graham's investing company. Buffett is enlisted to work as a stock analyst. His job is to look for businesses that fall under the category of cigar butts. This is an investment strategy known as the cigar butt approach, in which you try to find a somewhat depressing company that is selling for so little that you believe it still has some redeeming value. Due to his profession and investment talents, Buffett Holmes is able to expand his own wealth, which currently stands at $19,000, or roughly $200,000 in today's money. He quickly discovers the ideal opportunity. Rockwood is a chocolate manufacturer in Brooklyn, New York, but due to a sudden rise in cocoa bean prices, the business struggles to stay successful. Graham and Buffett, however, found that the business has a sizable supply of cocoa beans that may be sold for a profit. But there's a catch. If the corporation sells the cocoa beans at market value, they'll incur a hefty tax burden that will reduce their profit. Despite being unsure of how to resolve the tax issue, the chance is too excellent to pass up. Ben Grant discovers a business partner who offers a creative answer. Jake Pritzker, an investor who is only 7 years older than Buffett and 32 years old, has a keen understanding of tax regulations. Pritzker wants to create his own corporate empire in order to minimize paying taxes. He understands he could trade the Rockwood shareholders their stocks for the cocoa creatures. Jay Pritzker buys enough stock for himself to gain control and offers to exchange the cocoa beans for cash at a premium of $2 over the going rate. Ben Grant recognizes this as the ideal opportunity for an arbitrage right away. He may purchase Rockwood stock at a price of $34 per share and then instantly trade it for cocoa beans valued at $36 per share. Then, with a guaranteed profit of around $2 per share and no risk, he will use the futures contract to protect himself against any changes in the price of cocoa beans. Ben Graham may have discovered a means to make a quick buck, but his pupil Warren Buffett has grander plans. Buffett is aware that Jay Pritzker is prepared to pay more than $2 in order to purchase more securities from Rockwood stockholders. He must be persuaded that it is a fantastic business to own. Contrary to Graham's strategy, Buffett invests 75% of his personal wealth in the company's stock, placing all of his money on a stock price recovery. If Pritzker is wrong, Buffett risks losing not only money but also his standing at his company, especially in the eyes of his mentor, Van Graham. As the 1950s begin, the American economy is recovering even more strongly from the devastation of the Great Depression and the Second World War. Fortunes are being made all over, and the finance sector benefits as a result. Buffett is a young, aspirational investor from the Midwest. He plans to work for the renowned investor Ben Graham while pursuing his goal of becoming wealthy by the age of 30. Buffett believes he has discovered a chance to make his first fortune, investing the majority of his savings in just one stock. Buffett is placing all of his chips on the chocolate producer Rockwell, shares rising this year from $36 to $85 per share. And the young investor makes a profit of almost $13,000, which will be worth $144,000 in 2023. Warren Buffett respects Ben Graham but does not copy him. He comprehends the fundamentals of value investing so well that he occasionally deviates from his mentor's recommendations. However, when he sees his protégé performing well, the mentor is quick to promote him. Buffett is happy with his riches and position and anticipates quickly becoming a partner at Graham Newman's business, but all is about to change. Ben Graham makes the decision to retire and dissolve his partnership just as Buffett is about to be made a partner. Ben Graham stopped making investments because he believed he had enough money to last the remainder of his life. Additionally, he wanted to devote more time to his other passions, such as ladies and the fine arts, in order to indulge. With his credentials, he would have no trouble finding a rich position on Wall Street, so this incident serves as a reminder of how much he despises losing control of his career. But at the age of 26, Buffett made the unfathomable decision to leave New York and return to his hometown of Omaha to open his own store.